Marc Pinto from the Janus Balanced Fund runs a dynamic allocation fund. He's here to tell us where those dynamic opportunities are. Welcome, Marc.
Greg, good to be here.
All right, starting off, tell me, what exactly is a dynamic allocation fund? What are you doing there?
We basically are managing two sleeves of a portfolio that's a combination between equities and fixed income. What differentiates us from a lot of other balanced funds is we actually will move around the weighting between equities and fixed income based on current market environments. So we think we can actually give investors a consistent, deliberate performance because we can allocate based on where we see market opportunities. We're not locked into one or specific asset category.
And you run the stock sleeve. Tell me, in the equity world that you live in, where are the best opportunities? Where is it the most dynamic?
We're seeing opportunities across a bunch of different sectors. I'm particularly excited about the media and entertainment sector. Basically, we think the consumer, which is, as you probably know, is 70% of most economies. The consumer is a big growth driver in terms of companies' earnings and cash flow, and particularly in the media and entertainment sector where we see companies, essentially the owners of content, the stuff that we're watching on our iPads and on our TVs, companies that are creating that content, we think are really well positioned because there's more and more demand on where that content's going to be delivered, whether it's over your iPad or your TV or your Xbox. Companies that are making those programming that you and my kids want to watch, very powerful. And so we're seeing a lot of opportunities there, and they are a big part of our fund.
And a quick look at your portfolio shows that you're also a fan of healthcare stocks. They had a great run last year. Why do you still like them?
We like healthcare stocks for a couple of reasons. In certain areas, in pharmaceuticals and biotechnology, we're seeing innovations where treatments for diseases that really didn't exist are coming to fruition. And there's one thing that's very clear is that the FDA and the regulators will approve new novel treatments that help make people's lives better. So the key thing in investing in healthcare is to make sure that you have companies that are actually delivering drugs that people want to watch. We're also a big fan of the whole HMO services sector because we think even with Obamacare, it's going to create interesting investment opportunities for the companies that can deliver affordable health care to the American consumer.
Now, you run the stock side of the portfolio, so you're really not as focused on yield per se as the person who runs the bond side of the Janus Balanced Fund. That said, there's not a lot of yield on that side, so maybe you have to find it on your side. So what do you do when it comes to dividends? Do you like dividend-paying stocks?
Greg, we do. And we are seeing a lot of companies that in the past you might not have thought of as being dividend payers, because typically I think most people thought of dividend-paying companies that just aren't growing, that really have no use for the cash, and so they're just basically paying it back to shareholders. And we authored a white paper a couple of years ago where we basically showed that companies can both grow, in other words, reinvest in their business, and pay dividends to shareholders. So some of the favorite, our best performing positions in the fund are companies that are paying a dividend, growing their business, and using the growth in their business to grow their dividend.
So you're doing double duty. You got to pick the growth stocks and you have to get the yield. You're doing the other guy's work.
Well, I'm doing my work, but you know what? We're just meeting the needs of the investor. We know that investors obviously have to save for retirement, they have to save for their kids' education, they have to save for their health care costs, but they also need current income because, as you pointed out, they're not getting much income from bonds and treasuries aren't paying a lot. So we know that investors need to get a total return, they need to get capital appreciation, but they'd like a little income on the side to pay their bills. And so we just think that's what the market wants. And we're always about the client being first, so we want to deliver that for them.
And you're about being dynamic. Thanks for coming, Marc.
Okay, thank you, Greg.
And thank you for watching The Street.